Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday. And this is the 18th of September, 2023. Folks, next week, at the end of it, not this week, the week after, we will have more hours of dark in Chicago than we will have daylight ones. Isn't that amazing how fast it's all changing? And, of course, we'll be changing our time, I think, the 23rd or something in there. I think 23rd, isn't that the first day of fall? I don't know what day they do it exactly, but it's right around the corner. So we go into that saving too. Now, this is a big week. We have the trifecta of the Federal Reserve on Wednesday, the Bank of England on Thursday, and the Bank of Japan with monetary policies, Bank of Japan on Friday. We have now 2 weeks roughly to see, can they get a budget deal done, or does the government go into a shutdown mode? I think we're all jaded. The market doesn't care. I didn't say we shouldn't care. I said the marketplace doesn't care, because how it goes is they never get anything done in Congress to the last minute. They're never proactive. They could have months to negotiate. It's all done in a 4 or 5 day period where everybody's in a state of panic, shoving things down everyone's throat. That is what you're going to get. At the end of the day, yes, government may shut down. Yes, services could end for a brief period. And yes, they will be coming back on, because these guys that can't get anything done at the very last minute, they realize their constituents aren't getting a paycheck. They're not getting a Social Security check. They're not getting something because some service got shut down, and they don't want to be responsible to them. They don't want to hear it come election time. You think I'm wrong? Been through this my whole adult life. It goes on this way over and over and over. The contentious points, certainly the border wall is going to be brought up. I think the Republicans have had enough. I think, frankly, America has had enough with us not securing our border. And the impact in sanctuary cities, New York, Chicago, San Francisco, is devastating. If you don't live in one of those cities, you don't understand what has happened and how these people that are coming over the border, they can't work, they have no money, typically. They got to be on support systems from the cities that put it there. They want to work. Most of the people are good people looking for a new life, but they're here illegally, and we let them in under our Biden administration. Trump was trying to shut it off, at least. Biden welcomed him. And more important, Kamala Harris, who he did, if you remember, when he became president, she is going to be the one running the border issue, because it was a very big issue. She's done a hell of a job. And she's the heartbeat away if something happens to President Biden, if he gets another term, or right now. That scares me. So I was trying to figure out which market to cover, and it dawned on me, why not go to BND, the Vanguard Total Bond Market? Now, this is what it's made up of. So it gives you an idea of what this does. It's very actively traded. The lower it goes is typically due to interest rates going what? Up. So the market has been, if you take a look at it, overall dropping. I think you'd agree with that. When we put on the swing lines, you see that you're in a downtrend at this point. To break that downtrend, you have to get back over right now up here, and that number 71.14. That's what you'd have to do to get out of this. The resistance is 71.11, the 18-day moving average of closes. If you were to just all of a sudden shoot up over that this week in a straight line, you wouldn't have a buy signal, you'd have the end of a bear signal. You need to do different type of work to create higher highs, higher lows on a buy signal. But that's important in itself. And where's the support? The Bollinger Band. Now, each time this market has hit it, doesn't stay there very long. It seems to spin back up. Will it go down to it? I don't know that it can if the Fed doesn't hike interest rates. It depends what Mr. Powell says. We all know what he's going to say. If the market has it right, that he's not going to raise rates, he's going to say, however, we're very vigilant. And if things don't go the way that the data's coming in and that doesn't show weakening further in it, we stand ready to raise rates to fight it. Now, here, Mr. Fed Chair, what part of the data are you looking at that looks weak right now? Every report last week was stronger than the prior report. Every one of them. CPI, PPI, jobs data. I can go on and on with it all. What are you looking at? So what I think it's done is mirrors. They're saying, we see down the road that the lag effect is starting to take hold. Sure it is. Let me think. Gasoline prices, big lag effect, highest of the year. Rents, do you see them falling? I see them not going up anymore. That could be a lag effect. Or they just price themselves out where people can't afford them. Let me think about home prices. They're not going down. I read the papers just the way you do. They're going up. Because of a 7.37 30-year mortgage, they're not getting sold, but nobody's listing new homes or older homes. The new home can sell because the developer can play a game. He can, instead of 737, he'll find a way to get you in at 4 or 5. You're going to front pay in some manner or other, either by the grace of him cutting a price, or he's going to work with you to do something where you split something to get that first or second year down. You want to know why? To a lower number. Because you're all going to bet, rightly so, that these rates won't be this high in a year or two, and you can refinance. So that's how you keep selling the homes. Do you think this is my first rodeo? I got this gray hair for a reason. I've flipped a lot of real estate in my lifetime and helped my friends do it. And that is the game that you play. All right. Oversold market. So as a market technician, maybe you're going to go down there, but the gravy's out of it. You have a major report coming up. Trend is down, but why are you going to go through the report? That's your question you have to ask. Rivian, Tesla, all these other manufacturers that are not union shops, they have a big edge over what's going on now. Now, the United Auto Workers has made it clear they're not interested in 21% pay hikes over 4 years. They're not going to accept it. They have told you they want a 32-hour paid week, whatever that means. So they want you to pay as though they work 40 hours, but you'll do that for 32. I don't think that that's going to fly. Now they want pensions. I don't think that's coming back so easy. So where's this going? It's going to go in more layoffs. The first thing that's happening, we're already hearing it, some of the manufacturers saying, you're striking a plant that they stamp certain things that we needed another plant to finish a project there to get the cars into the assembly. We don't have that piece because you're striking. We have to let those people off. That's your fault, Mr. Union, and 600, 1,000, whatever. It'll just keep going. You're 4 days in. You haven't strained the system yet. It's coming. Now, President Biden wants to go there to observe. Joe, what are you observing? You don't dare tell the union they got to do something because you're counting on their vote in November. Not this November, next November. Can't alienate them. Do you honestly think that the automakers are going to listen to you? They're going to be like big oil. Joe, you haven't helped them. You're still not helping them. That's going to be the problem that we have. In UGA, you can see how the market's been coming down here. Okay, a correction. But I'll tell you, it's overall been good in the sense that how do you keep it down if crude keeps going up in price? That is the dilemma that we're all having. There's a certain elasticity, certain amount, to high energy prices where you cut back on gasoline, a certain amount. But when you got to go somewhere, you're going to drive your car. And most cars today are not electric. They are still internal combustion engine using that. I'm one of the smart guys. I have a smart car, and it is a smart car. I have owned everything in my lifetime. I've had Rolls's, Bentleys, Ferraris. This is the most fun car I've had. I've had it 13 years. I drive it around the city like mad. It's the Brabus series. I get 40 miles to the gallon, and I'm thrilled. It is not a highway car, so don't write me how dangerous it is in a highway. I'm the first one agreeing with you. But for a city, go to Europe. They're everywhere. They're electric. They don't even import them here because people think they're too small till you sit in them. And then you realize what a quote-unquote smart car is, and then you fall in love with the darn thing. And I have what they call their Racing Brabus version. I've loved the darn thing. Higher high, lower low, market fighting a battle here at the upper area where it's overbought. XLI. Okay, this isn't where you start putting out shorts. This is where you want to be covering shorts on the industrial sector. You're coming into the 100-day average in the Bollinger Band. That is not bullish. It's an area that I teach. Doesn't mean I'm right, that I teach. That's where I think the smart money covers short positions. Disney. Well, what are we going to do? We're getting Monday Night Football on ESPN, another station in Chicago coming on. Why? Because of the writers' strike. Now, they are going to meet, I understand, this week. Let's hope that there's some type of breakthrough. I saw that some of the stars that were going to do talk shows, Tamron Hall, Drew Barrymore, they've elected not to. Smart move. You don't need a problem with this. You got to stand behind everybody. It's nice that you wanted to do the show. The reality is, stand behind the people. If you're in that game and you need these writers, which you do, the last thing you need to do is alienate them. I didn't understand you saying you were going to do these shows. But higher lows, higher highs, and overbought. RSP, one of my good subscribers told me about this. This thing's so much better than RSPD, I think it is. The volume's certainly bigger. Oversold, now into the area where short covering should happen. You probed all the way down today. Now you're fighting at the 200, the lower Bollinger Band, not in a trend, a straight line break, as I call it in the market. I think enough to take a look. Why do you want out of some of these? In the consumer, do you not think we want to see what interest rates are going to do right here? I think we do. We want to see how the market's going to react and think. The consumer is supposedly tapped out. Credit card maxed out, 27% interest rates on their debt. The stores that normally hire and build staff right now, they start hiring. They get people in line for the Christmas season. Take a look at the amount that's going on. It's all over the Wall Street Journal, Barron's, go to CNBC, Bloomberg, the smallest amount you've seen in recent times. The stores aren't buying that the consumer's going to be there in a big way. Don't know if that's right or wrong, but that seems to be what they're doing. In the home builders, as we were coming here, I said, I'm getting, in my subscriber video, I said, I'm getting sell signals, not buy signals. Now I'm getting down to the point where this is where I would tell you, if you're my client, this is where you cover shorts. You're at the Bollinger Band, you're at the 100-day average, and you're oversold. Can it go lower? Sure. Is it a high percentage trade that it's going to keep going lower? No. It's oversold. It has to embed to tell me there's another leg. I don't see that at this point. Then we get to XLE, the energy sector. There's a problem. You lost the embedded reading. Any reading under 79, you lost it. I think the pro money got out today, right on the close. And I think that now, unless you re-embed tomorrow, it's the only time you can get it back. You got to be up very strong tomorrow. And it can happen because you didn't close at the bottom part of the range. You closed more in the upper half. If it re-embeds, it becomes a false signal. You capture a group of shorts, and then you try to make a run for the band here. If you don't embed right away, the odds favor that you're going to go back to the 18-day average to regroup that trade. GLD, sideways action, and I would think so. The market's looking to see what the Fed does. Are they going to keep rates where they're at? Is the dollar going to fall on that news? Are we betting on the dot plot that the members think that, no, we're going to get big cuts coming? Well, that's gold's friend if that happens. But if we get a 25 basis point hike and the dollar rallies off of that, that's gold's enemy, and back down you go. Is gold trending? It is not. It's out of a downtrend. It's not in an uptrend. It's caught in the sideways action you have here. Silver market today lost its bearish embedded reading. So I think you're going to go up and challenge at least the 200-day average tomorrow before you get back down to this number here. Could I be wrong? Very, but that's what my work says. We'll see if I'm right or wrong. In the copper market, COPX, you've come into all the resistance. I think professional money came out of this market. You hit the 100, the 200-day average, and the upper band, and you're there. Well, why are you trying to stay over it? What percentage of time do you stay over the Bollinger Bands? 5% of the time. That's a resistance point in moving average. In TLT, unlike BND, you're coming down to the short covering area. Okay, now I think the smart money will come out and take a look, see, free, and then decide do they get back in or not. UUP, the dollar, still bullish as can be, but do traders take money off the table in front of the Fed meeting? A lot of times they do. Then they come back in and go, nothing has really changed. But they don't want to be caught off guard, whatever that might mean. Remember, the market's been going up, and it's the flip-flop in FXE, which has the bearish embedded reading. So I'll be looking at those two. But as I said, I like to stay out of harm's way as much as possible. Now, one of the things we do is I put out both a morning futures video and a SPDR ETF video in the mornings. I put out the futures video. Typically, it's posted before 6 a.m. Central Time, and the SPDR ETF is posted typically before 10 a.m. I wait to start recording the SPDR until 9 o'clock. Let me give you the reason why. I want the off-exchange trades to balance out with the first half hour of trade. It's important. Remember, there is off-exchange trading. There's always that. Number two, we generally have a series of reports, and when they come out, the last ones typically are 9 a.m. Central Time. I want to see if any of those come. So I wait. Now, if there's no report, like today, coming out at 8, I start recording a quarter to 9, 8:45, right in there, something, and I get it out much earlier. But if I see the reports, I put it together. Each one of these will cover at least 40 charts. And I have a host of them. Monday through Friday, I focus on daily, but then I bring in the weekly. Whenever we have a trade, I'll say, let's take a look at the week. Is it verifying that we're getting a signal here? We go to the weekly chart. On the weekend, I look at the weekend charts. In other words, look at the weekly chart. And then I'll bring in the daily if I have a signal and go the flip-flop of it. The videos are typically 15 to 20 minutes long. They cover a lot of territory, I'll talk fundamentals. I will talk a lot of chart. I'm a chartist at the end of the day. So to see this and the other and find out about it, go to our website, iraepstein.com. Move yourself right up here if you want. If you have a cursor on a screen, click. The icon will get you there too. It's iraepstein.com under the word research. I'm Ira. I'll see you first thing in the morning. Take care.